All right, welcome everyone. This is a Viper Professional Training and Sport webinar. Today's date is June 1st, 2019. And the title of today's webinar is How to Wait and Trade the Retrace Trade. And as everyone knows that's been to our webinars or our live trading room, everything that we say and do at Viper Trading Systems is for educational purposes only. Futures trading, Forex trading, any kind of financial instruments trading involves risk. Therefore, there's always risk of loss. You should only trade discretionary capital, and that is money that you can afford to lose. Nothing said in this webinar. Other webinars we have, our live trading room or anything else with Viper Trading Systems, should never be construed as trading or investment advice. And as always, everyone does trade at their own sole discretion. Any questions on the disclaimer? If not, we're going to go ahead and get started. By the way, just a real quick heads up. I was mentioning the phantom trade yesterday in the trading room, and I want to show everybody where that video is so that you can be sure and watch that. I think most everybody in here knows where it's at, but it'll just take a second to get there. All right, here's our, this is under our members area only though. All right, just scroll down. Everybody knows that under recorded webinars and training, I need to change this actually, recorded webinars, training, and scripts, because the scripts are in here too, as you can clearly see here. But right down here is the phantom trades explained in detail right here where my cursor's at. I'll try not to highlight that. Right where that cursor's at, phantom trades explained in detail. It's about 17, 18-minute video, and it goes through exactly, but I'm going to go ahead and do that again this morning and show everybody how to get those good retracement trades. How many of you, when you're trading, just a curious point here, how many of you when you're trading get tired of getting faked out by these markets, the way they're consistently doing, with their sideways junk and all that? How many of you that haven't been with Viper before, or maybe you're just learning it? Because the key to trading is these retrace trades. You want to be sure and trade the retrace trade. Now, I do have this new little indicator that one of our subscribers gave us on the screen today. That's it. Basically, I've got this one here. We're going to put it out. It'll be the auto wedge, wherever it's at. Yeah, auto wedge down. This is the down one, and I've just got it with like a black line, and you can do the up one with a, it's got just a different one, basically where you have a white line right here. And we'll put these out, I'm sure, next week, and everything. Okay, but what you want to wait for, first off, is you want to get a thrust in your given direction. And by the way, when you see this color of mid-band, all right, this color of mid-band, you're going to want to be real careful, because the markets have literally gone sideways, is what it amounts to. So, what I'd recommend doing if you see something like this, like in real time, to give an example, you've had a huge move down, they've had a nice move up, and then they start not taking out lows and not taking out highs. Use this stealth right here. This will usually get you a pretty good trade. Go for the second one, not the first one, because see, the first one's usually a fake. And then there's your second one right there. And that's a nice deep retracement. Here's some examples right here. Now this is again that choppy stuff. Okay. But if you do this, there's stealth 1, there's stealth 2. You got in right through here. You put your stop up here and you never got taken out. If you used the second stealth, there's your first stealth. There's your second one right there. Okay. That's just a little heads up on that. Now, what we're looking for when we get a thrust down is we want some kind of a retrace. Now, the problem is, though, in trading is how far is the retrace going to go? Because it's not consistent. It's never consistent. For instance, if I was looking at this chart right here, I would guess that it would go back in here more than likely, because it hasn't checked it yet. Now, predictor says it would go to here. Just right underneath here, if you draw your line under predictor. Okay. So what I think that a person should end up getting in the habit of doing is you want to wait for that retrace is extremely important simply because you're going to get the best opportunity at a trade that'll continue in the direction that it's starting to head. Okay, like for instance, in this junk right here, you know, where do you actually take this trade? Let's say that this was 2:41 in the morning right here. Would you take this trade at mid-band and try to get 10 ticks? Take it at mid-band, try to get 10 ticks? You know, or like off predictors maybe, that would get you 10 ticks. 10 ticks maybe if you didn't get taken out. You know, that's the only way I would trade this sideways stuff is to watch these predictors. You know, and the thing is on these predictors even is, you know, if you're going to take them, you're going to try to get inside the predictor at least a little bit, maybe even to the white line that's in it if at all possible. But see, it doesn't always do that. You know, here's a predictor here that I would probably take on that bar close, put my stop, you know, 12 ticks down or so, and then you did get 10 ticks. This one got 10 ticks. Okay, that's those retrace trades. But in chop, or even in any kind of trading, you've got to take a scalp. Because, for instance, if you put, say, 3 contracts on here on, well, 3 might be a little bit much. Let's just say 2. Let's say you did 2 and you go for, you know, 10 ticks and a runner. Well, you would have gotten your 10 ticks, but you didn't get your runner, and you probably got stopped out at break even. So you made $100. This one here, you know, if you got this one, you more than likely didn't get stopped out here because you'd have your stop. Even if you used your stop underneath, like we teach, with the close of a bar, you didn't get stopped out. And you got your 10 ticks there also. Okay. But when you're sideways like that, notice that if you would have put on, like, say 3 contracts and thought it was going to the moon, it would have been up 10 ticks and right back in your face. Up 10 ticks and right back in your face. So you never make any money. And then it would actually take you for your full stop out if you happen to use a stop or under here. Everybody see what I'm talking about here? So the reason that we personally like scalps is because if you can get the scalp, you don't get hurt on any trade. Simply because if you can get those 10 ticks, then you really need to, you know, get as close to break even as you can on that runner. You know, you can't, for instance, go for like 20 ticks. You just don't get it that often. These markets are pretty much, you know, retrace, you know, 10, 12, 14 ticks and then right back in your face. They just do it all day long. Okay. Everybody run into that same thing. But now when you start breaking, you know, when you finally start breaking, then you realize that you're probably going to get a move. You know, for instance, if you look at this on Lightning 3 right here, let's just say you just got up at, I don't know, this is like 4 o'clock in the morning. It's too early for me, but anyway, let's just say that you got up and you saw this. You had a high, you had a low, you had a lower high, and you had a lower low. You had a lower high and you had a much lower low again. So is this actually breaking down? And the answer is yes. When it started breaking here, that was a potential trend change right here even. Okay. And you could box that as far as it goes, and you would have probably gotten it when it went back down below, you know, mid-band. But let's just go with the safe trades today. Let's go with, you know, mid-band is nice and magenta colored. That's your downtrend. You're breaking down. Your background's red, and you're looking for that retrace trade. Now, how deep does it go? Those is the key to this. And, you know, the thing is, they don't necessarily go fib numbers. They don't go, you know, to a particular level, even looking left to trade the right. You've got to see, for instance, you know, this is 38% right here on this move right here, and that's not even up to predictor. Predictor's saying more like right across here, and it's looking at this swing over here to the left, looking left to trade the right. Okay, pardon me. But if you were going to take this trade, you know, how would you go about setting up Object Trader to do it? I mean, what if this doesn't even do a minimum criteria, but yet maybe it rolls over and gives a monster move to the downside? and you can't really miss out on it, right? So one thing that I've looked at here also is this new object trader alert. This, where, say I've got my minor trade shorts on. Notice how these little black bars, little black bars, little black bars, little black bars, took out the black bars, so it's retracing. You're in a retracement mode now. Okay. So what if we decided, if this actually gives us another black bar, that we just go ahead and take the trade, or if it breaks this trend line, or like this little box. I'll put object trader on in a little bit. See how that, wow, that really moved. All right, notice how this actually broke the box, and you can tell it broke. What I've got this on is just on swing breaks. I've been playing around with this little indicator here on this alert indicator, because everybody knows this is pretty new with us, right? I mean, we only put this out like 3 weeks ago. All right, and it's really just kind of an alert system to let you know where the trade sets up. Okay, now what I've got mine set on is potential trend change at a full 15 swing strength. That's on these lightning threes. Now on my lightning minimum criteria, I've been playing with a 2 range and even a 1 range. And the reason for that is because all we care about is if it breaks the swing. Okay. And the swing, see, for instance, if you're looking here, you've got a low, you got a high, you got a lower low, right? You got a high, you got a lower low. See how that paints that? So I think this can be a real good way for all of us to get in these trades. And I'm thinking about talking to our programmer about when we put like a box in, maybe we can actually take a trade instead of like a bar close or a touch or whatever, maybe on the bar itself, the flashing bar. I'll talk to him on that and see, because I wouldn't mind getting in this trade right here. This is where I would have boxed it to begin with. You didn't know if it was going way up here, but you also have to be ready to take it in case it breaks down. Okay, and that's exactly what it did. Okay, does everybody see that? Now this actually didn't do a minimum criteria trade. Let me turn these off, and we'll turn on the minimum criteria short. Notice that it does not flash this right here because it never closed above line 2. Okay, now this is what I would consider to be minimum criteria, and a lot of our people have really caught on to this by just when it touches stealth. When it gets into stealth area right here, see this red stealth here, and it kisses it and rolls. That's still a kiss and roll trade, like we call it in the trading room all the time. Okay, and let's turn that other one back on. Let's see where we're at right now. Okay, notice that we had a black bar here and we took it out. And you even got a white bar right here. Let me see if the white bar, and see what this is doing right this very second. It's actually kissing the predictor right now. So could you wait for possibly a black bar and take that trade? And then put a nice tight stop on it. This would be that same box in again. Okay. Let's say that you're a touch type person, you're already in the trade. You put your stop where? If it goes back inside the box, right? If it closes back inside the box, you don't flip it at that point, you just get out of it. Okay, so right now you're in it, you're in the trade, you boxed it in. Your target's down here if it can get there, but you don't want it to really go back inside this box area right here, simply because not every trade's going to go all the way down to the bottom. Now this one may, we'll see, but if you took that on a touch, see how that bar's trying to go back up, then more than likely if this came back to my cost on that trade like that right there, inside that box at all, I would get out of that trade. Okay, so far it hasn't done it. We're still okay. Everybody see that? And like I say, if it does go inside that box, I'd get out of the trade and look for another entry. We'll see if we can get another one. if we get that. So right there, see, you could possibly be out, but that bar's trying to close down, so you're still okay. I'd still leave the stop. And by the way, that trade is not even a scalp yet. And if it does go back inside that box with that body, then I would get out of the trade. Let's see what it does. We're looking at retracement trades today. Looking to the left to trade the right also, and even using our little, cool little indicator too. Let's see, why didn't that trigger a black bar outside the box? You're talking about right here? Right here? Oh, let's see, that's actually a good question. It could be, there, you're out of the trade, by the way. See that? You're out of the trade. Okay, now notice that you have a little trend line along in here. See how the trend line draws automatically? Now, looking to the left to trade the right, I see a swing right across here, so I would draw my line right there. I would not want it to go any higher than that line right there for a possible rollover. Let's see, can we download the auto trend line from the members area? Not yet, David. We're going to have that. And I've got a new fix on this too. Notice that my bars don't flash back a long ways. The reason for that is because you can actually now, with the newest of this, you can actually control how long they're on your chart. See, like I got this set for 60 minutes. You don't have that yet. It's not a biggie. It's just that it goes back forever and ever on your chart. And if you got 3 days, you got flashing bars all the way back, where this is going to give us a little signal valid time span. Just a little plus on it. All right, let's see if we can get in another trade. May have to speed this up a little bit. Breaks that trend line or gives us a little rollover type bar, we'll get in the trade. Now that should give us a little black bar if it takes out that right there. Let's see if it does. Yep. Okay, so you're in the trade. Broke that trend line too, didn't it? And on that one there, it looks like you're going to have a little scalper. About one more, but there you go. You got a scalper at least right there. There's a 10 ticker. Okay, bank some coin, obviously, because you're right down there at the very bottom. Okay, and then you ride your runner. Okay, so that little trade worked out. Now notice how I managed this one though, because anytime you're not up into this mid-band area, this little sweet spot right here, you want to be a little bit more careful because they'll fake you. And if they fake you, do you want to put your stop all the way up to here? You know, like for instance, if you got in here on this bar, like that, and then you put your stop all the way over here, you know, that would be, what is that, 55.62 all the way to, say, 47. That's 15 tick stop. Well, with 2 contracts, that's a $300 bill, and it just almost got it. See what I mean? It did give a lower high than over here, but still, you know, if you used a 15 tick stop, obviously you could have stayed in it and even added here. But could you see that this could be a little bit better way to do that? Because, you know, for instance, if you got in, let's say you got in on a touch +1, so you got filled right here, and you let it go back in the box, you might have given up 5 ticks. Okay? And then you got a nice monster move on this one that actually worked out. Okay. Now, one other thing that I want you to see is that if you'll go for the ABC, but see, this was a little fake ABC, ABC. This was ABC. See it? Like your low, your high, your higher low, your higher high, rolled over. So this was actually an ABC type trade, with at least not just straight up bars and then roll. So wouldn't that be a better way to manage that? You know, and try that, for instance, on like even anybody doing the micros yet at all, just to test out some trades at $1.25 type trades, or even 50 cents on Russell, I think it is. I haven't traded Russell on that. I forget the symbol on it. But see, this was a legitimate, what we call a minimum criteria trade. See here, it came up above stealth and line 2. You boxed it in, and that was a legitimate trade. It just didn't work out. Okay. Now, if you're the type that looks to the left to trade the right, you could have put your stop here, and granted, a 15 tick stop, you would have felt about $260 worth of heat before that rolled over and gave you that trade. How many of you don't usually like that? Now, what you could do also is, if you get in here, just do it with one contract, and then you're only feeling a little less heat than that, or you got to get out of it when it goes back inside that box. Because see how these trades that work out do? They seem to always go outside the box and they work. But yet the ones that don't work usually retrace some before they ever roll over. Okay? Anybody have any questions on that? So when we're in, now if you did, like, let's say that this was an entry that let's pretend this is at 8:30 in the morning when Charles walks in the room. All right, if he took this trade here, he would put his stop at midband. Midband did not get taken. Would he have felt some heat on that trade? Yes. Did he make money on that trade? Yes. But that's sometimes hard to do, because if you did 3 contracts here, you're down $400 some odd as this rolls over. Okay. And you're only looking at what's happening in real time. This is what the chart was doing at the very moment you were watching it. Let's just say this was 8:30. We'll pretend it was. So you're in the trade. You're still in the trade. You're still in the trade. You're out of the trade. See it? Close back inside the box. You can even turn on Object Trader to where, for instance, you go short here, and this took, about a minute, so you had plenty of time to turn on Object Trader to go, you know what? If you go back in that box with a closed bar, I'm getting out of that trade. And all you'd have to do is, instead of having a short here, you'd have a long at the bottom to scale out your trade. Okay? Now, let me get a quick show of hands. How many of you, if you get a trade like this, just go ahead and hold it with this stop or with midband? Just a quick show of hands. I won't mention any names or anything. Because I even get to where I do that occasionally myself, and I think, why in the heck did I hold that? So you can't. Because if you do, who's to say that this wouldn't have taken this out and gone all the way up here and tested this swing where it broke down profusely? And then you think, well, I'll hold it, even up here because it's going to be a phantom. And then it doesn't roll over and it goes up. See what I mean? You've got to go by, what you're seeing at the moment. This is absolutely a legitimate Viper type trade called a minimum criteria trade. This one didn't even hit minimum criteria, and look at the monster it gave you. Okay? So that's the way I would personally do it. Okay? Simply because, as a rule, that's going to save you from getting just whacked around. Doesn't mean you couldn't still get in this other trade that we clearly drew in real time, and there was your entry right there, and you can clearly see that that bar turned black right there when it took out that little micro swing. And that trade turned out very nice. Okay, and you're still in it, by the way, with what? Your runner? Okay, let's play this through and let's see what it actually does. And let's watch our little black bars. Now, did that turn out to be a monster or what? Looks to me like it's almost over. What do y'all think? How can you tell that that's almost over? Anybody? See the black bar? Is that heading down any longer with those black bars? It's not, is it? It's absolutely not. So if you were trading this with your real capital and you got in on that bar and you watched these black bars as they were heading down, heading down, heading down, heading down, but then all of a sudden you're no longer heading down. Well, technically, you start heading up. You'll get a white bar when this actually gets taken out to the upside. If it does, let's see if it does. I'm just curious on that one, if we get a white bar. No white bar yet. There's your white bar. See it right there? So basically that was saying that we were starting to head up at that time. So could you have actually gotten out of that trade at least right in through here? You know, it'd be a pretty good area to get out, wouldn't it? Now, here's another typical example of a trade right here. All right, let's see if we can get this trade right here. We're going to draw it in. We're going to take it if it breaks that box, and we're going to stop if it goes back in the box. Okay, it's out of the box. It's in the box, but it didn't close. That closed, you're out. See, now, trade like that went ahead and worked your direction, but here's another one. What do you do when you're in it, for instance, like let's say that you got filled, I don't know, say 07. Well, would you want them to go all the way to, I guess you could use 14 as far as that goes, that's 7 ticks, because the trade did actually work out for a scalp. But, you know, if you're one of those that actually, let's see, you got in right here, it actually closed back inside the box right here. You could always, you know, just go with the candle that you went with, you could actually go with a stop above it, with, you know, if it happens to close. See, because that was your entry right there. So you could have still stayed in that trade, I guess, if you wanted to. But if you use the box deal that I teach also, then you did close back inside the box. So that's kind of an up to you type situation, you know, what you want to do. Because in real time, that was a legitimate mid-band trade that entered. And I guess, you know, what you could do instead is kind of like these black candles. You could actually go ahead and just use the candle that you get in on and not let it close above it, and see that one didn't. So you were okay. I guess you could try it that way. I personally, a lot of times, just like the box, because if they fake me, you know, I'll give them $50, but I won't give them 300. You know, because then you'll end up on the wrong side of the thing totally. This looks like, let's see, starting to stair step up a little bit. You haven't had a phantom just yet. You want to try a phantom and see if we can get one that'll work? We'll try it. Now, our phantom will be off the table if we get a green background at all. Let's see what we get here. Let's see. Brian says, I've been studying that, and a lot of times your stop is safe if you put exit on the close on the entry candle. I think you're right on that, actually, Brian. You know, that's a good observation. I've seen that myself. It's kind of like, you know, these black bars like this, for instance. Let's say that, you know, at the time, pardon me, you didn't know let's say that you got up at 418 and you missed this whole thing, but you decided, hey, this hit line 2 and, kind of rolled, so I'm going to get in on that black bar. Yeah, you could always put your stop just above the black bar itself. And, it wouldn't cost you that much at all. That's true. Let's see, what is your preferred setting for minor trade after your testing? Jonathan, I'm kind of liking, I think what it really boils down to is that regardless what size bar you choose, as long as it's 4 or under, is going to actually give you, I think, pretty much the same one, except that 2, well, basically, when you're looking at a 2 range instead of a 1, instead of a 4 range, you're going to get like it's looking at a little 1 range, because they could be one tick up, one tick up, one tick up, and then start rolling over. And when it takes out the swing, it'd do the same thing as most of them. See, it's just taking out these swings. See there? See where it takes out that swing to the left? This one takes out that swing to the left. It has to close though. See how that one wicked it and didn't take out that swing? It wicked it. And then this one would be black here if it closed below it, should be. I would think anyway that one should be black right there, in my personal opinion. Now, this may be simply historical data on market replay that this is not exactly where the price was at the broker. That's a possibility. Okay. But I have found these work pretty well. It's basically, just a really fast lightning is what it boils down to. Okay. Let's just fast forward this just real quick. Now, I like a line 7 type trade for 10 ticks. There's line 7. And you might have gotten 10 ticks. You might have. See, that's a line 7 trade right there. And so if you entered it, say if you got somewhere around 23, it was only 8 ticks. So you might have gotten a scalp is about it. All right, but what trend is it now? Anybody? So what are we looking for? Right now, if you went to your computer, you've got a green background, you got a green midband. What trade are you looking for? Anybody? Absolutely long, right? Pull back to midband. What if it doesn't go to midband? What kind of trade could you be looking for? A box in or a retrace trade, right? Let's see if we can get something. Now, here's one thing that I personally like to do also. If you happen to walk into your trading room and let's say it's 4:30 in the morning and you see a support area holding, okay? If they even get close to that line and bip up above it, a lot of times, that trade can be taken. Now, you got to be careful because this is a double top, but see your swing, high, low, higher, high. This swing should actually hold on a pullback, if they're not going to go ahead and go all the way down to like midband or predictor. Thrust, retrace, thrust, this is more your secondary swing right here. They don't really want to test this if they want to head up, because to do that, they wouldn't be getting higher lows. Everybody see that? Let's fast forward this just a little bit. Let's turn on midband minimum criteria long. Let's see if we get one. Now, like I said, if you get a support level like that, I'd probably take it. Did that get a minimum criteria? No. See, because you didn't close. Let's see here. Wait a minute. Now, like I say again, this may be historical versus actual. That bar is down right there. I would certainly think that bar is up. So to me, that should be a minimum criteria trade right there. That should be a white bar. Maybe it is. Maybe it's black because we got that turned on. Let's turn that on. Turn that off. Turn that on. Minimum criteria longs on. So it did not flash it. I got it set for an hour, so that should. So to me, like I say, that is a minimum criteria trade right here. And if that didn't flash, I don't exactly know why, unless the price wasn't really there with the broker. Because one thing about, when you're using range bars with no gap, you should get the actual prices. We just use regular range bars. So, but to me, that would have been a classic trade that we teach. See, for one thing, it came to support, and you could have boxed it in and gotten that trade. Okay. Another way you could do it too. Let's just check one other thing too. I'm gonna get rid of this lightning here. We don't really need it. I'm gonna get rid of any of this, and I'm gonna turn on minor trade long to the upside. So let's see what it looked like in real time. All right, we got our green background and our green midband. We're pulling back a little bit. There's your little white one, but that'd be a breakout trade. There's a little white one right there. And there's a little white one right there that came down to line 6. So could you actually take this trade on like that bar? Probably, because again, if you draw your lines on your chart, you knew support was right there and it bounces off of it, I'd probably grab that in a heartbeat. That's a trade that, there's times we'll be in a trade, to give an example, when Charles walks in the room and he looks for a trade like this, one that's kind of going sideways for the last 15, 20 minutes and keeps kissing a support level, because he'll even call out the support level like, 56.23 needs to hold. Well, if 56.23 holds and you happen to decide you want to take a trade, you can certainly do that. Okay? Everybody getting something out of this webinar a little bit? Because the whole thing about trading is that, no matter when you trade or how you trade, there's always going to be that chance, that you're going to take a trade that's not going to work out. Okay? And we've all got to be smart enough to get out of trades that don't work out. Okay? Let's see if we can get another one. Let's just pretend you're not in anything, but you got to wait for at least a retrace. Okay? So we're going to use predictor. We're going to use lines on our chart. We're going to see if we can get any kind of a retrace trade. Let's see what one of these we got turned on. Yeah, we got them on. There's a little retrace trade. Everybody see that? Drawn in real time. See how that perfectly came down? That is a minimum criteria trade too. Notice how that closed below stealth and below line 6. Would you box that in? Would you take the trade right at the line that I drew? Okay? See, that's what you're looking for on retrace trades. Looking to the left to trade the right will make you more money if you learn to do it and then get out of trades quickly enough if they go against you. And try it in sim for a while if this isn't something that you're used to. Okay? Because remember, here at Viper, we don't actually use all kinds of indicators and things like that. We basically take trades based on what we see on those charts. Okay? It's super important to us just to take trades based on what we see. All right, let's see if we can get another trade. All right, we have a high, a low, a higher high. You don't expect to go any lower than here, so I'm going to leave that line. This one doesn't count anymore. Everybody sees that, right? Let's see if we can get a trade. May go too fast, but we'll find out. There was one little one. It didn't, yeah, that was a minimum criteria, I guess. It didn't flash minimum criteria, though. You could have gotten a scalp on it. Here we go. Everybody see that right there? High or low? Would you take that trade? Let's just, for the fun of it, take it. Let's just see if we can get $200. Watching that bar. I'm going to go ahead and take it. Now the reason I took that, I'm going to go ahead and put my stop just under here, just a little bit underneath that swing, just in case, and I'm going to put it on exit and close. Everybody see the reason I did? Because it gave me another chance to get there without going through this support. Okay, I didn't want to quite buy a breakout. I wanted to buy it as this is actually giving me a higher low, because we're in an uptrend. So an uptrend is high, low, higher high. Higher low, higher high. Okay, you don't want to take this low out if we're going to continue heading up. Now that's not a real risky trade, by the way. And by the way, if it stops me, I'll go back in it. If it does like a trend line break or something like that, we'll see. Now, if this goes up and tries to take out this line right here, I'm going to click close. Because see, this is testing. Now you're no longer getting a higher low and a higher high because they tested support. If they go back, I'm going to close it and get back in, and I'll probably be going deeper. Still okay. I'm out. They're trying to take that support out. Now see, I lost 80 bucks. Okay. Now, what am I going to do if I'm going to take this trade? Well, a lot of times what they'll do then is you'll look at your secondary one that should hold. I'll show you why on that. Let me draw lightning 3. You're going to see this in real time. High, low, higher high, higher low, higher high. Okay, this is a higher low right here. This is what I consider to be your secondary, that if they finally take this out, they're no longer heading up. All right, now this time I'm going to be a little bit more conservative on this because I'm going to do probably what we call a red bar probe, and I will box this one in. We're going to box it in right above mid-band. And if it goes down low enough, I'm going to box it in lower. Okay, so that's a down bar, that's an up bar. So now I can actually do it more like this. See this? The reason for that is because you got a down bar. If you get an up bar, then that would be a 1, 2, 3 reversal. And we may still head down. That's fine, but we're not going short. So we lost 80 on that one. But notice, I mean, that's only 4 ticks for 2 contracts. So that was actually pretty good trade management, right? But now we're playing catch up. Now notice that conservatively, you really never got a trade. I was trying to outguess the market and say, okay, you really don't want to take this out if you want to head up. So the market said, well, Gary, you're wrong this time. But if you use tight stops, you still didn't get hurt. Okay? So let's see if we can get a trade. Wow, this is slow. Speed it up a little bit. Now I'll go lower if it happens to go lower because I'll do a phantom. That's 1 tick above. I'm going to add one if they break that trend line, if we get in and they break that trend line. All right, we're in, well, I didn't get it. Now we're in a total of 3. We're going to put our stop just right underneath there. Okay, now notice that we're, oh wow, we're up, we're down 200. We're still in it. Are they going to fake us again? We'll find out. This is like any day that you're trading. They do this stuff all the time. There we go. We're okay. Good. We're okay. I'm going to go ahead and take both out at the top because I don't see where they're going to. They should hit their head right here a little bit, but that's not enough of a scalp to me. Now I'm going to tighten my stop. And there you just made up your 80 bucks and did well. Now, let's re-diagnose that same trade for a conservative trader, okay? Because aggressive, you can make more money, but you got to know what you're doing, okay? And that looks like that's plenty. Would you stop for the day even? You could even put your stop just underneath here. Little swing, just in case they double top. Then you could use line 6 as your stop. Just engage your trail and ride your runner. See how line 6 is moving up? Now notice I've only got one left on, so I'm in an actual runner. And you know, you don't want to give all your money back on a runner even. You don't have to go back to line 4, which is mid-band, because line 4 is 24 ticks from any time you're at the very top at this phantom area. That's 24 ticks down. Okay, so to me, I cannot see going all the way to mid-band. Now Russell, you pretty much have to. Russell will whip you around and it'll go to mid-band and even under. You know, sometimes that thing's just too whippy. Okay, now that turned out to be a pretty decent day even after losing 80 bucks. Now let's do it a conservative way. I'm going to go ahead and close this out. We don't care about it. Let's go ahead and look for the retracement and do it conservatively. And I'll show you how to do this. I'm going to get rid of all the lines. Now, if you were looking at this from a conservative standpoint, all right, first off, looking at lightning, you would put your buy above here right now. That's conservative. It goes down a little bit further. Everybody see, you could then put your buy just above here. And see, they got you in it then. So that's a conservative way to do it right there. And you never gave up your 80 bucks to begin with. Okay? Because you're actually looking for those, well, draw your lightning and you'll see it. Let me draw lightning. All right, so you had from here a high, a low, lower high, and a lower low. So basically at the time, let's say that you were watching this. You said, okay, if I get down around mid-band, I'm going to box this in, right? Well, you've got to actually let it at least do either break, you know, start breaking and taking out a resistance area to the left like this. Let's say that this wouldn't have done a little zigzag and it just went straight up. Well, the minute it breaks resistance, which is along in here, you could take that. But as long as it's going to stay lower than that, you could actually just stay with lightning like that. Now, does everybody know that you also have on your lightning, I think, let's see if it works on this just real quick. We've got it on our indicator, so let's just see if it works on here. This is lightning 1 right here. Now, this is what we call MTF script. So this is actually, you know, could you change lightning to like a 1 value and see what it looks like? I don't know. I've never really done that. But since I got those flashing bars, I kind of like it. Let's see what it does. All right, lightning 1 is Alt key. No, that didn't do it, did it? Let me draw it from over here. Maybe it did. Let's just see. Yeah, no, that's just pretty much the same lightning. It's just really swing breaks, isn't it? That's all it is. Let's go with Alt key off and let's turn this on. Oop, not that one. This one. Minimum criteria. Not minimum criteria. I don't want that. I want this one here. Minor trade. Long on. minor trade short on. See what that does. Okay, there's your short right there. Not shorting, I mean, but it's actually the black bar instead. I got to look at that code today, because to me that might have been an hour. Well, no, it is flashing there. See how this is not actually giving us our little black bar here and not giving us our little white bar. I would think it would be even here. I'm gonna have the programmer look at that code, because it's looking at quite a few things on here. Because when this was heading down, to give an example, and this is back more than an hour, so I would have to go ahead and change my new indicator. I'd have to change my new indicator to like a couple hours back or something like that. I'll just put it on 480. See what that does. And the one thing too, if you get in a good morning where you get yourself up like $550 or something like that, couldn't you just call it quits? Because how many times have you gotten in a trade and then they end up taking you for a stop out or something like that? That happens to all of us, by the way. Okay. Now, when would this, if this was to decide to change trends, high, low, higher, high, wouldn't you expect if it actually broke this that more than likely it could? Let's see if it does. Fast forward it a little bit. There, it broke it. There's your trade. Everybody see that? Retrace trade. Box in. Now let's look at this and see, how would you take this conservatively? Okay, watch it in real time. All right, let's say, first off, if it comes up to mid-band, okay, which we're expecting it to come to mid-band, you'd start watching your little swings, wouldn't you? See, there's a swing right there. There's a 1, 2, 3 reversal right there. And you're in it. Let's see what it did for the fun of it. Got 10 ticks. Ooh, nice move. That was another rollover trade, by the way. Now, how would you have taken this one? Let's say that you're watching for mid-band. You didn't get your 1, 2, 3 reversal, because see, if you had your box drawn like this, you never got it. And then it went up some more, and then it went down, and you pretty much got it right there, didn't you, on that bar? Or even that bar for sure. Right? Now, that wasn't a phantom trade. Matter of fact, does anybody remember this on Friday morning? We were in this short trade, remember? It came down to exactly where I said it would, and it bounced so quickly all the way up to here and then rolled over so quick. We didn't actually get this trade till right here. Everybody remember that? That's exactly where I called that trade in the room, because this was too quick. You couldn't have gotten it. Now, looking at replay, of course, you would have gotten it right here. But I think this was too fast, if I remember right. Let's see if we can get any more trades. See where you'd stop. Could have stopped already, right? That was a monster trade. This right here is an area that you want to really teach yourself to look for too. This is your minimum criteria trade. Let me turn it on for you. Minimum criteria short. And we'll turn this one off. So let's see if we got minimum criteria short. Did I turn that one on? Oh, phantom, sorry. Minimum criteria short. There we go. All right, that's a minimum criteria short trade. So the way you would take that would be bar up. You just simply enter on the, when it goes below the bar that flashes, right? So you're in the trade. This one didn't do minimum criteria right here because it didn't close above line 2. Now, if you use just the black bars to get out of a trade, unfortunately, you would have gotten out on this one. See how your black bar, that black bar's still okay. See how it's right with that one? And then you got black bars down, black bar down, black bar down, down, down. And no, you just get out when it took out this black bar. Let's draw the lines. See a black bar right across there, and that bar is lower. That bar's lower, that bar's lower, that bar's lower, lower, lower. Takes it out. Or even the second one, you get out of the trade, and you'd be out of the trade on that line. It's not a bad way to trade, actually. You know, you'll still, unfortunately, leave some on the table. But look at this also. It hit perfectly down to a support level, too. If I remember right, we nailed that trade. Didn't we call that trade exactly at that 54.83 on that day? And it came down to it just perfectly. But, you know, this is absolutely the way that you trade these markets, okay? Everyone, you just got to train yourself to see the trades in real time. Is this another trade right here as we speak? Let's just, for the fun of it, we'll take it. I'm going to take 4 just for the fun of it. I'm going to put my stop just above there. And let's see if it works. If it doesn't, I'm going to lose that whole $500. Got it. And then I'll use my black bars to get out of it. Everybody see that you could actually have probably already gotten out of that, but let's see if it goes down a little bit lower. And you stopped. Everybody see that? Of course, we didn't move our stop for that, but you obviously would have, right? Everybody sees where, whoops, sorry. So let's look at this again. Now this is in a 1 again. Like I was saying, I changed mine to a 1. I've been using a 2. You want to see if it would have actually, because this got you out right here or even here, got you back in, got your stop just above the black bar, and that would have stopped me out. So that may have been a little bit too tight of a stop, because this just barely went above line 2 and then it cratered again, at least a little bit. So let's see what this looks like on a 2. Everybody sees it right now, right? You got this flashing bar here and flashing bar here. So I'm going to change this to a 2 and see what we get. Because remember, I'm just playing with this alert now too, myself even. I like them though. I don't a lot of times need them on my chart with the, you know, mid bands and all that because I can see them. I like these little minors on though. Okay, minor short on. Let's see. So this one with 2, you had a bar here. So let's say you got in on the rollover. So you're in, you're going down. So your stop's just above the black one. Stop's just above the black one. Stop's just above the black one, and you're out. So it would have gotten you out either way, and then still. So if you were doing it this particular way, this would have probably stopped you out. Now, if you look at it more like this was a low, this was a high, and it never took out the low, they won't ever hold these little micro areas. So on a deal like this, you might just want to hold if you were just doing a runner and just not let it go back into like this line 3 to 4 area. You know, instead, this area right here. But, you know, with each trade, it can be different. So would this have still been a good trade if you would have taken it and gotten out? Yeah, you would have made some money. And you could, of course, gotten back in, you know, when you saw this come bit back up and draw a box again with minimum criteria, right? Yeah, you could do that. All right, so what does everybody think? retrace trades, looking to the left to trade the right. Let me take 5 minutes to go over the phantom trade because I promised people that I would do that. All right. A phantom trade, you go from one extreme to the other. Okay, so you're going from long to short. So see, your midband turns your short color, and you're looking for your first phantom. Now your phantom is actually between lines 6 and 7 on a short, so this is not a phantom, but it is a box trade. Okay, that was not a phantom. And then you didn't get another phantom, and then the next one you would be looking for would be a long phantom, which would be down in this area here, like so. Now keep in mind that this isn't going to be here. It may be clear up here by the time you actually see it, because this is going to stair step. Let me see if I got any questions coming in. Gary, can you show me how to add those micro index futures to my instrument manager? Sure, Kathy. Let's take a second and do that, okay? Go to Tools and Instrument Manager. All right, I'm going to go ahead and just get rid of them for a second. Just like you've got yours, you don't have them. Okay, so that's just normal equity futures and oil and all that. So what you want to do also, let me get this over here. What you want to do first is you want to make sure that you go to Tools and Options and go to your data and reset your instruments. And you have to have the newest version of Ninja. And it's best to go ahead and uninstall the one and reinstall it and then reset your instruments. Once you reset your instruments, then you have them in your instrument manager. So the way I do them myself is, rather than looking for names that I didn't even know existed, I just typed in micros on the search engine right here under description, not under the name, because the name's going to be different. Type it under the description, and there's your micros. And you can actually put all those in if you want, or just part of them. Now, you can look at them and see the names of them and everything. You know, like there's the Mini Russell, so you might want that. Oh, I didn't save that, so mine's in there. See, that's the Mini Russell. The MES is the Mini S&P. And the way this works is you actually, put these on your chart, and they're a tenth of what the regular one is. So, for instance, if you were trading, the ES futures, you would be 12.50 a tick, but you'd have to have 10 contracts of this to be 12.50 a tick. Okay. Now, One-Up Trader, by the way, does allow these. Now, at this point in time, TopStep does not, but they are evaluating it. You know, they're looking at liquidity and all the different things. I've already talked to them about it, because I think it's going to be huge for TopStep traders and One-Up traders, simply because it's going to teach people a lot more how to trade without risking, blowing accounts and things like that. Because, for instance, if you go into an evaluation account for $50,000 account, let's say with One-Up Trader, with our discount, it runs you $112.50. Well, if you blow that account, it's another $112.50 to start a new one, or you can reset it for $100, but then you still have your $112.50 coming due, the following month. So I recommend, if you accidentally blow one, just start another one. Okay. But anyway, that's the way you add these. So for instance, if I didn't have these in here, like so, you just pull up your micros, search them out, and then just simply go and say, okay, I want to trade the Russell, and I want to trade the S&P, left arrow, and I want to trade the NASDAQ, probably not, but anyway, we'll do it. And there's your micros in there. And then you just simply click OK. Then when you actually want to change it to a micro, you just go like MES right here. And we'll go ahead and change this to a micro real quick. Okay, this is a micro now. Now, notice that this is exactly like the S&P 500, but if you were to take a trade, this is only going to be $1. For instance, let's say that I shorted this right here. Watch, see how it's $1.25 instead of $12.50? See there? So, I broke my trend line and everything. So see, now I'm at zero. Now I'm down $2.50, but I'm not down $25. This is actually, just not a bad way to, take some trades with real money, or like a valuation account with like one up or top step. Well, not top step because you can't get the micros. You will be able to more than likely get the micros in the near future. I would just about bet you, because they're not stupid. They're gonna want to go with what people want to go with. I think the micros, at first I didn't think they were a good idea, but then I got to thinking about all the people that I talked to, and it's not bad actually. Just to give you an example, this dollar and a quarter right here, uh, now granted we just did it for one tick just to show this, but this only costs like 41 cents, for the entry and the exit. So it's 82 cents total. So even on that little quick trade there, I made 40 some odd cents. Not that you would stop there, obviously, but they don't charge near the commissions on it. They only charge a tenth. And you can go to, well, just talk to your broker because they're different on different accounts. If you've got the lifetime license with Ninja, it's cheaper. Micro Crude is QM. It's been around a long time. I don't personally trade the QM, but isn't the QM only half instead of micro? Because on the MES, the S&P 500, it's only $1 and a quarter. But I thought on oil it was half. I've never traded the QM. Okay, how's the volume of the micros? Phil, on your question, it must be good enough because I've been testing it, to kind of relay it back to Top Step. And Connor, I don't know if any of you know Connor over there, or even the CEO guy, the Patek guy. But I'm trying to kind of check and see, if there's any problems with liquidity, the fills and all that kind of stuff on a one-up account that I started just for that. I didn't tell them it was one-up, obviously, because they're Top Step. But I did a little playing around with it on Friday and got $200 on it with only doing a maximum of 3 contracts. So it can actually, be something the person could definitely add to their, trading portfolio. Definitely. Let's see. Yeah, we took a lot of these trades that I showed Friday, by the way. Anybody have any final questions? Let's see. Gary can help with the new setting, please. Call me, Albert. On which new setting you're talking about, Albert? On which new setting? Let me write down your phone number and I will call you. Just one second. Be sure and have a team viewer ready from our website when I call you. That way I can come in and we can do whatever needs to be done. Okay, let's see. Yeah, Brian, I like the settings on the indicator. The one thing I love about this new alert is the fact that it's going to show you, a lot quicker how to get out of trades. Now, sometimes it's going to be a little bit, tighter and you may have to get back in them. But, keep in mind that, for instance, when these things are stair-stepping, to the downside and then they quit going to the downside, you're probably better getting out of them and getting back in anyway. And if they happen to take it, box it in, get back in. They take it again, look at that one. That was practically, well, it was a trend change. Would you have taken this trade right here, anybody? Because come on, in real time, it would have happened. So you're looking here, you got lightning 3. You got a little box there at mid-band. You've very possibly taken the trade, or if you box it like this, let's just do it. At the time, it was like that, right? So they faked you in. By my rule of thumb, okay, they faked you in on this bar right here, right? So if you put your stop above that bar, they took you out. So how much heat did you really feel on that? Let's say that you got filled right here instead. And if this was going to be real, it would roll over, right? So, like Brian says, if you put your stop just literally with the bar that, gives you your entry, then, don't let it take it out. Well, that would have cost you, say 5 ticks, maybe 6. And then this thing just happened to go crazy. Does anybody remember this on Friday? We actually took this trade on Friday when it broke above the mid-band and boxed it in, if I remember right. But yeah, this was Friday. I'm almost positive I took that trade. But anyway, and there's other things you can do too. If you see like lightning 3 to the left and you get a fake rollover and they break that resistance, take the quick long and don't let it go back against you. Same rule of thumb applies. If you take that trade on that breakout, up, never went against you. And you got a nice monster trade. Okay? All right. That should wrap it up. I hope I went over everything that I should have. And keep in mind on the Phantom trade, be sure and watch that video, that 18-minute video, because it really goes over exactly how to do these Phantom trades and how to make good profit on them. Would this have been a Phantom trade, anybody? No, because the bar never even closed down. Couldn't have gotten 10 ticks. If you just shorted line 7, period, then the bar didn't even try to head back down. So, would you have actually shorted that? Probably not. All right. We're going to be doing these indicators and everything next week. I'll try to get this little script kind of polished up. If you guys and gals want these little wedge lines, because you can turn Object Trader on to take that trade, by the way, because it is a wedge, or a ray, so it will take that trade. Okay. What I'd recommend doing if you're going to do that, though, would be to do 2 charts and have wedges for both. Now, if it's in an uptrend, I would just simply use the other one, which would be going this way instead, and use this one only on the short side. Okay. When you got the actual, for instance, if it drew a line like this and rolled over, you get you a trade. If it drew a line like this and you roll over, you get you a trade, because this thing will draw in real time and it constantly moves too. All right. Thanks again, everybody, for coming. I hope you enjoyed it. And we teach this method every single day of our lives. And, if you keep your stops nice and tight, don't let markets dictate to you. And also don't, when you get in a trade, think that just because you think it's going to go long or short, that it's going to continue your direction, and you've got to be ready to get out. Okay? I think like on Friday, Charles called one trade that did not work, if I remember right, that went up through the box and then back down through it. But usually as a rule, when that happens, you'll make more, especially it opens. If they do a little fake at the first, you'll usually get the other direction pretty quickly. All right. Thanks, everyone. Have a good one. See you on Monday. Did I miss anybody? Oh, Gio, on your question, this will absolutely be posted in the, I'll go ahead and get it on the public area for you. You're really interested in the true trend also? Well, this will actually do, give you an idea of like, what the trend is doing with these little auto trend lines too. Okay, we'll go over those more on Monday night. All right, thanks again, everyone.